Ladies and gentlemen, we will now proceed to panel 2 titled Trade and Economics. I would like to invite the following distinguished panelists on stage. First, Mr. Sanjeev Sanyal, Principal Economic Advisor, Ministry of Finance, Government of India. Next, Dr. Debapriya Bhattacharya, Distinguished Fellow, Center for Policy Dialogue, and former Ambassador of Bangladesh to the WTO and UN offices in Geneva and Vienna. And finally, Dr. Dushni Weerakoon, Executive Director, Institute of Policy Studies of Sri Lanka. This session will be chaired by Mr. Vinod Rai, Distinguished Visiting Research Fellow, Institute of South Asian Studies, NUS, and the 11th Comptroller and Auditor-General of India. I now hand over the session to Mr. Rai.
Ladies and gentlemen, welcome to this second panel discussion for the day. Our subject today is trade and economics, and I dare say that we've got three very experienced and well-qualified panelists who are very well equipped with the subject today. We have an hour and a half at our disposal today, so I guess 20 minutes each for each of the panelists, and we'll dedicate about half an hour towards the end, question and answers. Without much ado, I think I'll get on to the first panelist for the session, Dr. Sanjeev Sanyal. Dr. Sanjeev Sanyal is Principal Economic Advisor to the Ministry of Finance and Government of India. He's an internationally acknowledged economist, and he spent 2 decades in banking. Most of it was in Singapore, and he was acclaimed a young global leader by the World Economic Forum. But the interesting part about Dr. Sanyal is that he's an environmentalist and an author, and I must commend to you his last book, the third one, I think, last one on the ocean of churn, an excellent read. I've read it and I enjoyed it tremendously because his knowledge of history and that region comes across so very well. I think Dr. Sanyal is one of those experienced professionalists who Amitabh Kant described in the morning as an import into India. After 20 years of banking and other experiences, he's come back to India sometime last year, and he's devoting a lot of his time on public policy and economic planning in the Ministry of Finance and Government of India. I hand over the platform to Dr. Sanyal.
Thank you, Mr. Rai, for that very kind introduction. Let me begin by thanking ISAS for inviting me here to speak to you. I have, as you just found out, and many of you know, lived in Singapore for many, many years, and I've actually spoken at some of the earlier editions of this conference and at many other events at ISAS, so it's good to be back. Thank you. So what I'm going to speak about for the next 20 minutes is give you a flavor of the India's external regime, trade regime, so that you get a flavor of the how things have evolved over the last few years, over the last decade or so, and then give you a flavor of the kinds of things we as the economic managers of this $2.5 trillion economy think about various issues. Well, let me begin by giving a flavor of who India trades with. I think that's interesting because, of course, there was many discussions here earlier about integration of South Asia, about its relationship, about protectionism, etc. That's maybe coming up in the rest of the world. So it's interesting to note where and how things have evolved in the recent past. Now, if you look at the 2 panels, it's an estimate of the top 10 markets that India trades with for the year 17-18 that has just concluded. It's an estimate, so it's based on the first 3 quarters of the financial year, compared to how it was 10 years earlier. And you can see a very obvious pattern. Clearly, the US is the biggest trade partner, but interestingly, its share has actually gone up. It accounts for 15% of India's trade, merchandise trade. I will come to services a little later, of a merchandise trade. So it's a very important country, and its position has actually strengthened over the last decade. Also important is the UAE. But let me point out that it's mostly about Dubai as a transshipment, so it's really a proxy for all of the Middle East. But again, the Middle East is a very, very important place for our exports. It was 10 years ago, it continues to be today. Then you have China and Hong Kong. Again, Hong Kong is obviously transshipment, much of it going to China, although some of it also goes to Taiwan and other places. But again, Hong Kong plus China was important 10 years ago, still very, very important. But notice that China's share has not dramatically gone up. I mean, China plus Hong Kong share. In fact, China itself has, in fact, in merchandise trade, come off a little bit. And then you have, of course, Singapore, which was important. Again, some of it, this is transshipment, nevertheless. And then you have UK, Germany. And then Bangladesh, Vietnam, and Nepal. Now, compare all of this to 10 years ago. Again, I said, US is very, very important. Was important 10 years ago, still important. China plus Hong Kong was important then, still important. But look at what has happened to Europe. Completely disappeared. Other than UK and Germany, all the other countries have fallen rapidly off the chart. And this decline of Europe is quite telling. In its place, what has come? In its place, you have the Bangladesh, Vietnam, Nepal. So this idea that earlier somebody said that the economic integration of South Asia is not happening. That's actually no longer true. India and Pakistan may not be trading, but there are other South Asian countries and they are trading with each other quite actively. In fact, as I said, Nepal now accounts for 2.7% of India's exports and is, not too different from how India and Germany trade. Was not the case earlier, but is the case today. Nepal is in the top 10. So this integration is happening, and this is happening not just in terms of trade. There are other things in which also this integration is happening. Investments and so on. So how does India, as policymakers, we see the world now? Typically, we had tended to historically think of the African market, the Asian market, the European market, and so on. Instead, the way we have begun to perceive the world has changed to the following. One is China plus, that is East Asia, China plus, and that entire ecosystem that exists on the eastern seaboard of China. That has become one sort of block. The other is the US, North America, but really it's mostly the US. That's another block. And the third block is a new one, which is the Indian Ocean rim. And this is interesting because the traditional classification wouldn't take this into account. But if you look at this list, you can see who we are trading with. We're trading with Southeast Asia, and by the way, I'll show you that countries like Indonesia, etc., also become much more important. You have the Middle East, which UAE is proxying there. Of course, in the imports, they were always important because they're a source of our fuel and energy. You have Africa, the eastern seaboard of Africa in particular, and of course the immediate neighbors. So the Indian Ocean bloc, rather than the old European breaking down of the world as Africa, Asia, Europe, etc., that Indian Ocean ecosystem is becoming increasingly a very important way in which we think about the world, as for trade, but other things as well, geostrategically as well. Who does India import stuff from? Here, China dominates. China is 16% of India's imports. It was important 10 years ago, but it has dramatically increased its position in merchandise imports. US was important then, but unlike in exports, where they have increased their share, India's imports, merchandise imports from the US in the last financial year actually went down. The UAE is, of course, UAE, Saudi Arabia, etc. is important because we trade, we import our oil there, and the number that has come down a little bit reflects more price than quantity, because oil prices were lower than, say, 10 years ago. But they've gone up recently, but nevertheless. Then you have again, you can see, other than Germany, the Europeans are not in the game. In fact, they had stopped being a game quite some time ago. And even Germany, notice that its position now is being taken over by South Korea. Increasingly, India imports more and more South Korean machinery rather than German machinery. So it is quite interesting. Again, you can see the two big blocks. You have China plus, you have US, and this Indian Ocean block that is becoming very, very important. And you can see that here as well, by region if you do it. And because the data is not easily done in terms of Indian Ocean, but I think increasingly we will begin to calculate it this way as well. But you can see what's going on. Over the last 15 years, the share of EU has clearly come down. The share of North America went down and then went back up again. That at least partly was because of the economic cycle. You have a long-term increase in Africa, a long-term increase in Asia, ex-South Asia, and now, more recently, an increase in South Asia as well. So this is the world that we are discussing. Interestingly also, we have also diversified into many more smaller markets. So the dominance of the top 10 markets has also diminished as we have brought in South Africa, Oman, Kenya, etc. They are also becoming markets of some importance. Now, this is something I thought was interesting because there has been in recent times a lot of debate about bilateral trade balances, and this is of course an important in the context of protectionist debates. As you can see, India has a fairly large surplus with the US in merchandise trade, but also with Bangladesh and the UAE and Nepal. Again, the importance of the Indian Ocean world. And it has a very, very large deficit vis-a-vis China, and interestingly Switzerland, but you know, this is a more complicated story. And of course then the countries from whom we import oil. Now what is the composition of this trade? Now the most obvious thing that you can see when you're talking of merchandise trade is that much of India's merchandise trade is intra-industry trade. So we import a lot of petroleum products, we also export a lot of petroleum products. So crude comes in, refines go out. Of course, there's a net balance which is against us, but nevertheless, this is true. True of gems and jewelry. A lot of rough cut diamonds comes in, and a lot of it goes out. Machinery and equipment, certain kinds of machinery and equipment is imported in, but India also exports all kinds of engineering goods, all kinds of chemicals, base metals, and so on. So a lot of the same products come in and go out. Some of it comes in different segments, some of it comes in as raw material and goes out. So this is an important aspect of India's merchandise trade. There are of course some exceptions. India remains a major exporter, as it has for last 5,000 years, of textiles. And it imports a lot of electronics. You can see that again here in the merchandise trade trends. Ignore the big red line, which is basically suggests the trends in petroleum product prices. But as you can see in the long run, two areas are clearly going up over time. One is the importance of machinery and equipment in our merchandise exports, and plastics and chemicals in our merchandise exports. Those are the two categories that are on a sustained basis becoming more and more important. Now we move on to something else that is also, of course, well known to be very important to India, which is services exports. Services exports, as you can imagine, is dominated by one large category, which is computer services, IT services. So 41% of that $188 billion of services exports is related to IT. Then there are other categories like travel and so on. And you can see that in the imports, similarly, we import a lot of trade, technical services, business services of various kinds. But we also import some IT services as well. But on net, IT services is a very important part of our services trade strategy. But look at it from a global perspective. If you look at global ICT services exports in 2016, clearly the US is the dominant player. So it's a big, big player. And then you have the others. You have the UK, which is very important, Germany, and then we have India. But you know, there are countries which are much not so known for their ICT exports. And like China. China is not a trivial player in this market also. Not as big as maybe the top 5, but it is out there at number 7, so not that far away. And you have a country like Ireland, which is a serious player as well. Now look at what is the composition of India's services export, of software or rather IT services exports. About 2/3 of this is something called IT services. This is your IT maintenance, updating, and so on. Though that is 2/3 of what IT services is, i.e. the second order use of technology and maintenance and so on, which India made its name in, but that is where it continues to dominate our services exports. Also important and growing as a share, BPO services, engineering services, very kind. But look at one interesting category called software product development. This is the category where new products are being developed. And for a while, in the late 2000s and early part of this decade, India was becoming actually a major driver of new software. And look at actually, India has actually lost its place in this. With new areas like artificial intelligence and so on developing, India, at least so far, has not become a driving force in this. So in fact, in some ways, in this particular space, the cutting edge in some ways, India has actually fallen behind, as countries like US have really dominated that space. And I believe China is also investing enormous amounts of money in some of these new areas. An important source of the external sector earnings for India is, of course, our remittances. A lot of it coming in, by the way, from the Middle East. Not surprisingly, it is correlated with oil prices. So that gives you a sort of flavor of the India's external sector. So what, looking ahead, should we be thinking about? Well, obviously, the one big issue that we need to think about is the return of protectionism globally, and the debates that you now have worldwide, particularly between China and the US, about bilateral deficits, about bilateral trade, but also when deals are being done, they are becoming increasingly block or bilateral based. There is really a genuine breakdown of the multilateral process, of which India is very, very concerned about. And very recently, about a month ago, Commerce Minister Suresh Prabhu actually hosted a sort of mini conference in Delhi of the WTO's WTO leaders, and sort of is attempting to get the conversation back. So there has been this debate. It is potentially quite destructive to the global trading system as it stands. Now, this does not mean that there are no flaws in the current system. There are clear, and I won't get into which country does what, but clearly some country exploit the current system in unfair ways. But whether or not we are able to come to some sort of a sensible rule-based system is surely a matter that needs to be now seriously revisited. In my view, at least, this has got to be based on some sort of a multilateral basis. This plethora of extremely confusing trade deals across the world is now actually not very productive way of going forward, and may have, as the current trade wars suggest, that in path of trying to bypass the multilateral bottleneck may have run its course. Then there is the issue of energy prices. Yes, I mean, global energy, alternative energy technologies may be dramatically improving, but for the time being, the world remains dependent on fossil fuels. And in the last decade alone, you had this massive spike, that huge collapse, and now a sort of mini spike so far, with prices going back to nearly $70 or thereabouts in the recent weeks. This is again a major issue, the instability of energy prices. It's not good for producers or consumers, and something that we need to bring back into the debate. Right now, it is not a part of the global debate on trade and economic imbalance. Which brings me finally to the most complicated thing, which is technological change and the rapid changes we are seeing in all kinds of areas: robotics, additive manufacturing, artificial intelligence. I know many of these, there are infinite number of conferences these days on this topic. I myself happen to chair one of the G20 tracks called the Framework Working Group, and we have infinite numbers of debates on what should we do about this change, these various kinds of, and its implications. The fact is that, frankly, we really do not know about the unintended consequences of many of these things. Now, this as a policymaker is not very easy, because it's all very good to say that we should do something about it, but do what? Especially when you don't know what you are trying to respond to. It's even more complicated when we in India are ultimately, to a large extent, not the origin of the technology. So in some ways, these technologies are happening. We are sort of the equivalent of a price taker. So you're a technology taker. Yes, we develop it in various ways, maybe in India in some way, at some point, but largely this is coming out of Silicon Valley or some other place. Maybe someday, increasingly even China will be adding to this. So really, the issue is, in my view, yes, there are some areas where India needs to invest and try and be at the cutting edge, but really the response, I think, that is the most practical in any reasonable time horizon is for India to be a really quick second mover. We are probably not going to be great first movers, but we've got to be great second movers. And there are some advantages to it. I mean, Singapore, for example, is an example of a country that has become a first world country by being a great second mover. Okay? And being a second mover is not always a bad thing. In fact, it can sometimes be an advantage. The Americans invented flying an aircraft, but I always much prefer traveling Singapore Airlines vis-a-vis any American airline. So it is not necessarily a bad thing. The point is to adapt and change and apply better rather than getting too fussed about being the first mover. I think very often it sounds cool to be the first mover, but I think here in India our dominant strategy for the time being is to be a good second mover. With that, I'm going to stop and hand it back.
Our second panelist for the day is Dr. Debapriya Bhattacharya, who is a distinguished fellow at the Center for Policy Dialogue and a former Bangladesh ambassador to the WTO and the UN offices in Geneva and Vienna. Dr. Debapriya Bhattacharya has recently edited a book which is the Southern Perspective on the post-2015 International Development Agenda, and he will be speaking to us on the emerging China in emerging South Asia, in the case of Bangladesh.
Thank you, Mr. Chair. Good afternoon, Excellencies, esteemed guests, participants, colleagues, friends. It's my pleasure to be here. Let me start by thanking the National University of Singapore and ISAS for inviting me over today and giving me this privilege of sharing some of my thoughts with you on a very, I would say, a bit of an emerging issue. It's an engaging issue, and possibly what I'm going to talk about is, whilst I talk about more specifics in terms of Bangladesh, but you may soon realize that it is quite a generic issue relating to the South Asian countries, particularly the smaller neighbors which we have around us. The issue is about, so the first issue which I have over here for you is increasing Chinese involvement in South Asia. If you look at this table, you will see that China's role in imports in Bangladesh in particular, but in general in South Asia, is increasing over time. And if you take 10 years back, it was less than 10%. It is now more than almost 20% now in South Asia. Of course, there are extreme values like Myanmar, and but even in those cases, in other cases, you will see in case of Bangladesh, it's more than quarter now. The import is coming from China. If you move to other to the issue of exports, and you will see the share of exports is not increasing at all. It is still around 5%. And although if you again take out the extreme case of Myanmar, you will find that in most cases the share of exports from South Asian countries to Chinese markets are stagnating very much. The general message coming out from here is that China is more as a major source of import for South Asia, less of an export destination. And if you look at the export values and the import values, you will find the trade deficit is increasing over time, and as a share of GDP, it is also increasing as well for most of the countries. So that's one of the interesting trade pattern which is coming through in this particular case. If you go to the issue of foreign direct investment, where here you will find that the Chinese investment, I am talking about FDI, not ODA or other official flows over here, the financing is quite erratic in certain ways. Of course, again, once again, Myanmar, the extreme case with 90% plus as a source of FDI in that country. And you will find that in other countries, it remains very much less than 1%, less than 5% in most cases. And it is as low as 2% or on average 2 to 3% over there. Now, if you see, even in case of India, it remains less than 1% over there. And let us now move and see what happens in case of other than FDI, in case of other financial flows, official financial flows over here. You will note that in this case, the Chinese shares of the public financial data, public finance flows is increasing. That's very interesting. That the official flow is increasing vis-a-vis stagnation in the case of private sector flow, foreign direct investment. Well, given the nature of the economy of China, that is not very unexpected. So you will find that it is almost 18% of Chinese official flow is now going to South Asia, and the increase is very obvious. I have put up another table on the right side, you will see, which is much more interesting possibly. It is China as a source of import of arms and ammunition. And you will see that the share is pretty steady, around 15% of all the arms and ammunition coming to South Asia is now sourced from China. And of course, Myanmar once again is 80% plus, but you may note that there are cases in Bangladesh and others, and the numbers are erratic because there are bulk purchases in certain years or bulk deliveries in certain years. That's why the numbers are very erratic, but obviously the growth is very obvious, China emerging as a major source of arms and ammunition amongst the import items in case of South Asia. And it has been reported that China still remains the second largest source of arms and ammunition in South Asia at this moment. Now, let's look at the second issue. If that is the overall picture of China in South Asia, where we see a growing presence as a source of import, as a growing presence as a source of official financial flows, a growing presence in terms of arms and ammunition, but remaining a very modest presence as a export destination. Now, what is happening in case of Bangladesh then? Let's have a look at it. So if you look at Bangladesh and the China relationship over the recent past, you will see the diversification is quite obvious. The diversification, what we see is that if earlier China was very much limited in case of, which is very well known, earlier in case of defense supply and then by infrastructure, but now we see that in case of technologies, in case of other issues including aid financing, suppliers credit, the diversification is quite obvious, both in terms of numbers and qualities, and scaling up is very obvious over there. The interest of China in case of Bangladesh is also supported by the number of official agreements which we have done in the recent past, 17 numbers in the recent 20 to 30, 2-3 decades. But what is more important is the two major regional efforts which attracts Bangladesh towards the Chinese initiative. One is, of course, the BCIM, Bangladesh, China, India, and Myanmar. Over there, the center I belong to, Center for Policy Dialogue, which played a pioneering role in setting up this initiative. And the other is, of course, One Belt, One Road issue. Nowadays, we don't say one anymore, so Belt and the Road initiative over there. And if you look at this recent past, the President Xi Jinping's visit to China, to Bangladesh last year, year before last, really ratcheted up the scale of involvement, Chinese involvement in Bangladesh, and where we signed up almost a $13 billion plus number of projects over there. So if you look at this table, you will find that the involvement of China, as in case of Bangladesh, has immensely expanded, and as I said, both in scale and in scope. And if I go through if you take your time and you go through the list, you will see that the infrastructure projects prominently figure over there. But if you look at the others over there, you will see an issue which is being greatly debated and others, the delivery of the submarines to Bangladesh in 2016. And in this year, in particular, the Shanghai Stock Exchange has procured 25% of the controlling stock of Dhaka Stock Exchange over there. This is a totally new area within which the Chinese government is moving into in case of Bangladesh. And incidentally, the other competing party, which was there for that particular deal, was the another Indian firm over there. The recent Chinese project over here, if you see, had been over here. Most of the projects which are Chinese supported projects which are being implemented in Bangladesh and delivered, is almost all of them are in the priority list of the government. So it is not only about the scale and the scope, but also in terms of prioritization, that it is acquiring a very significant strategic positioning within the development plans of Bangladesh. And if you see, many of them are really critical infrastructure projects, starting from the Padma Bridge, which is one of the longest bridges in the world. It will turn out to be where we were declined the World Bank financing, but the China came in along with our domestic financing provisions. But so railway is one. But if you also see that Chinese government is going to collaborate with our country in setting up special economic zone exclusively for Chinese investment over there. And many of the others are coming in also in the area of communication, the new express highways, and also power plants and over there. So it's really a very rich set of portfolio which we are now dealing with China. I mentioned about the Bangladesh being interested in the BCIM economic corridor. Have a look at the picture. How critical is Bangladesh in geostrategic location? And what we did a couple of years back, from our center, we promoted a car rally, which is a very unusual thing for a think tank to do, what we call K2K, Kolkata to Kunming, and we really remain interested over there. We know the Indian government's interest in the area, but in the recent past, it has been pretty lukewarm. We always thought that without Pakistan in this regional conglomerate, India will be more interested in over there. But we have seen in the recent past a bit of a soft paddling over there. There is a task force working which produced number of analysis and work program to take this thing forward, which is essentially connectivity, but it is more than connectivity. Although its physical connectivity is its backbone, but it's more than that. We know the strategic location of this BCIM's route is that it passes through northeast of India, and also there are insurgency issues and other soft areas of sensitivities. And so this is something which is out there, a bit of a suspended animation, which we may call. And if you look at the BCIM, Chinese perspective is very well known. And one of the interesting issues is that the new China-inspired or China-promoted Asian Infrastructure Investment Bank, one of the first loans came to Bangladesh. And these are all also in line with what I have just described, the expanding a presence of Chinese involvement in Bangladesh over there. Now, other than BCIM, of course, you will find that what is happening is around the BCIM corridor, as it expands, that we are seeing that the possibility of setting up number of economic hubs on the way and accessing Myanmar market on behalf of Bangladesh, as well as the other issues of getting the region in more integrated through physical infrastructure, which may be followed by financial linkages, if not other policy coordination. Now, the other issue, as I mentioned, was the case of Belt and Road. The Belt and Road issue, Bangladesh remains very interested in it and has been thinking about how it can benefit from the greater connectivity through this Belt and Road initiative. But as we know again, that this Belt and Road initiative was not really as enthusiastically received by India in this case. You may recall that the Belt and Road meeting, which is the summit level meeting which happened, Bangladesh at the last moment really has to scale down the profile of the delegation which was to participate in that. So again, this is another very important project which is there, and Bangladesh definitely remains very, very interested in it because it sees that it will reduce its transaction costs of expanding its economic access to the Southeast Asia and beyond in certain ways. Let me move on, and they say is the concern which is there regarding the Belt and Road is also understood. It has not so much the economic, but the growing potential of having political influence in the region, particularly in South Asia. And obviously there are, we have heard about that recent initiative, the 4 countries, USA, UK, Australia, India, to have a counterpoint on this particular road initiative to happen. Now, let's come to the India factor. As you can see, this is what is the issue that whether the Chinese involvement over there in South Asia in general and in Bangladesh in particular can happen without remaining totally oblivious about the existence of India and its strategic interest in our part of the world. Now, if you look at this table, you will see that, of course, India is growing economy, but still remains largely much lesser than China. And if you look at the growth prospects or the past historical growth trend, then you will see that although India has been growing pretty fast, you see almost 10% over the last decade, but at the same time China has grown almost 17% per annum. It's annualized annual growth figure over here. And if you see that in terms of exports, they are pretty matched, 10% versus 11%, 9% by 12%, something like that in imports. So nonetheless, the issue is that India is more favorable to the foreign investors, as you can see. But the Chinese FDI outflow is larger, which has a greater impact on the rest of the world in terms of Chinese presence over there. So then what is really China's interest in South Asia? This is a very oversimplified, stylized fact. One is, of course, you look at South Asia, as one of the moments for your multilateral and regional strategy. So it is not so much region, but the global strategy within which you fit in a region which is expanding, which is growing, which is very potential, as we can see. Then it is, of course, the competing regional influence interest over there. You compete not only with the regional powers, but we also, China competes with extra-regional powers over there. And then whether China can emerge as a natural leader of the southern countries and without its historical baggages, whether it can play a bit of a role of a neutral arbiter over there. And obviously, in a multipolar world, China remains overall a general pole for economic growth and as well as strategic influence. Now, this is a table where I compare, in case of South Asia, the numbers between India and China. And you will see that the India and China, in terms of its exports, China, in terms of its image, if you look at China's shares in exports of South Asian countries, you will find that the China is marginally ahead in terms of export destination over there in case of South Asia. Of course, the highest exports, the recent export going up is Pakistan, almost 8%, but also in case of others, we also notice a marginal improvement. The interesting part is that China has, as India has done, China has also offered duty-free, quota-free market access to the least developed countries in the region, which includes Bangladesh, Nepal, Bhutan, and no more Maldives. So, but we have not seen any significant improvement in terms of the share of exports from these countries to the Chinese markets. That is something, a matter of interest. But if you look at the share of imports, then obviously China dominates India almost in case of all the countries in South Asia now. And the extreme case, of course, is over there is Pakistan. And of course, Bangladesh, as I mentioned earlier, and Sri Lanka, almost all of them are more than 20%, 25% are Chinese sourced at this moment. So in terms of exports and imports, India, of course, China has now greater presence in South Asia integration than in India as it stands at this very moment. And if you look India-China share in FDI, you will find that in case of Bangladesh, Indian share of FDI is higher. But in case of most of the other countries, the Chinese share in FDI is higher than Indian investment, other than Sri Lanka possibly. So India has no investment in Pakistan as may be anticipated. So what are the, how does India compares in terms of projects and other involvement in Bangladesh? You may remember the Prime Minister Modi's visit in 2015 to Bangladesh, which was a historic one, then followed by my Prime Minister's visit to India, where almost, I think, 35 different agreements were signed. And the major the exchange which is happening, or the relation, is that 3 lines of credit which was extended by India to Bangladesh. And together it amounts to certain amount, $3 billion, and the new one, where together it will be around $4.5 billion. And the projects under the third Indian line of credit is also very interesting. So it's a power sector. It is about the connectivity with India and Bangladesh, construction of railways, and then of course you will see infrastructure, various kinds of things. And also India is also going to get another export processing zone exclusively for the Indian investment as well, just in case of China. So please do remember how it is being matched. So the power, infrastructure, and others over there. Now, you know, the India relationship with the rest of the South Asian smaller countries is now very, very well known. And my colleagues are here, they will talk about this. But we understand the case of Maldives. We know that very well. The recent positioning, the varying position of China and India vis-a-vis the recent development, political, judicial development in Maldives. If you look at, in case of Nepal, after the new government came in, India's ties with also has been, it's for Kunda to say more, and here this is then that we see how the Prime Minister Oli has responded to immediately after elections to the Chinese government vis-a-vis India. And somebody told me, Kunda may correct me, the first person to visit Nepal after their election was the Pakistani minister, if I am not wrong, not an Indian minister. So interesting relationship with, as I said, in Maldives, in case of Nepal, and then in case of Pakistan is very well known. Gwadar port is something which is really bothering India in many ways, and many others in that sense. And the naval base which is being proposed is also an issue with in the region. So, and if you look at Sri Lanka, it is also the same. After the new government came in, they tried to scale down the relationship with China, but still it remains substantial as it stands. So the point I was making, that the involvement of China in South Asia is not a Bangladesh case. It's a regional case. And it is true not only for Bangladesh, it is true for India, it will be true for Nepal, it will be true for Maldives, and it had been true for Pakistan in many ways. So this is an interesting new disposition which we are going to observe in the future. Now, let me come to the conclusion. I don't have any conclusion. It's a game in making. You know, what Bangladesh has been doing is that, and rightfully so, Bangladesh is integrating itself with the world. Bangladesh remains one of the most globalized countries now in the region. Almost 65% of our GDP is integrated in one way with the global economy, whether it is export, imports, foreign direct investment, remittances, and overseas development assistance. So Bangladesh remains integrated. So it's very natural for a country like Bangladesh, relatively small in area, but with so much of potential, it will integrate also with the regional and extra-regional or near-region markets. And India and China remains the two most potential areas in this case. And just to mention that what Bangladesh has done till now is it has been doing a strategically conscious, I would say conscious, that a positive dynamic balancing act with the two. And the balancing act is certain thing that you do not find. You have to create it. And till now, what Bangladesh is doing, it has given space to both the countries almost equally, even in the last recent past, and then try to address its own core objectives of economic progress, peace and security. The question is, a dynamic balancing act, is it sustainable in the medium term? Is there a rupture point? Because we are seeing India as a regional power, essentially which was more interested in peace, security, is now moving into investment, finance, infrastructure very rapidly. On the other hand, China, which was essentially indifferent to local politics and essentially wanted to do commerce, is now taking interest in domestic matters in a neutral or an indifferent way, but they are not in an ambivalent way, but not indifferent about it. So this is a situation which is out there, and we would love to see how it evolves further, and Bangladesh obviously will be following many of the regional countries, how they manage this particular challenge in the coming days. Thank you very much for your attention.
Thank you, Dr. Bhattacharya. We have the third speaker for the panel, Dr. Dushni Weerakoon from Sri Lanka. Dr. Weerakoon is the Executive Director of the Institute of Policy Studies of Sri Lanka, and she will be speaking to us on Sri Lanka's case for post-war economic development in a challenging and changing global landscape.
Thank you, Chair. I'm going to give a fairly broad brush view of Sri Lanka's economic development challenges. As a country that's seeing a transition from a post-war situation, but some things of what Deb mentioned in that previous talk on Bangladesh is also quite relevant to Sri Lanka in terms of how it has balanced its domestic and external challenges, including geopolitical shifts. So for Sri Lanka, 2009 was seen as the point of departure from 30 years of conflict, a chance for not only rapid economic growth, but also for domestic political reconciliation, etc. But the immediate challenges that the government faced were quite difficult in 2009 after 3 years of an intense conflict. Apart from a 30-year war, the economy was in a fairly bad shape. Growth had dropped to 3.5%. We had a huge fiscal deficit of 10% of GDP. 2009 was also the time at which the global financial crisis was beginning to hit, and our export markets, primarily in the US and the EU, were taking the brunt of it. So there wasn't much of a favorable environment to look at. And thirdly, Sri Lankan government was also under immense pressure from the international community on charges of allegations of human rights abuses, etc. during the last phases of the war, and there was scaling down of economic assistance from the EU as well as from the US. For the government, clearly new challenges and opportunities. The challenges was that after a long war, it was expected that they would deliver a swift peace dividend. But at the same time, with a fiscal deficit of 10% of GDP, there wasn't domestic resources to do that. And Sri Lanka was also graduating to a low middle income country, and its traditional access to concessionary forms of financing was also drying up. What the government decided was that it would go for an ambitious public investment program to build up infrastructure and use that also as a post-war development initiative to reconnect the former conflict-affected parts of the country with the main economy that had been less impacted, and this was also in line with some of the advice that was coming from multilateral institutions who were advocating that there should be some degree of fiscal stimulus in the face of the global financial meltdown. And the global financing landscape was also conducive for the government to do this. After the financial crisis, central banks in the US, in the EU were practicing quantitative easing. International capital markets saw interest rates coming down. Foreign investors were looking for new markets in emerging economies that would give them higher returns. And of course, what Deb was talking about, the emergence of new sources of development finance for countries like Sri Lanka, and that was China. So Sri Lanka embarked on what we might say is a borrowing spree. We began to issue international sovereign bonds from 2007 up to date. We have issued more than 10 billion international sovereign bonds in capital markets, and we accessed major loans from China for infrastructure development. To date, about 8 billion in loan commitments, and the government also opened up its securities market to foreign investors. So if you look at the composition of Sri Lanka's external debt in a matter of 5 years, I think, from 2006 to about 2012, a sharp change where previously almost 93% of the external debt was on long-term concessionary financing. That shrank to less than 50% in 5-6 years' time. Now, these new sources of finance was attractive to the government for certain reasons. One is that there's an advantage of volume. Infrastructure means you need large amounts of financing. Domestic resources are now available. Institutions like the ADB also gives only limited amounts. There's ownership. You can plug those resources to whatever projects you want. You can align it with government priorities, and there is also the speed of delivery. For a government that is keen to revive an economy, these sources are quite attractive, but they also carry significant risks when the institutional structures for debt management in a country are weak, because the governments have a fairly free hand in selecting their projects, and sometimes these projects can be political prestige projects as opposed to those that are considered to be more priority-wise in terms of their economic returns. And there is a lot of literature out there today that suggests that these kinds of financing can lead to unproductive investment outcomes, particularly when the institutional structures are weak to manage such borrowings. Coupled with that, there is also a lot of studies that have been done, even by the IMF, that suggests that public investment in infrastructure can lead to a slump rather than a sustained growth that governments envisage. And this is exactly what happened in Sri Lanka. For the first 3 years after the government invested heavily, growth was in excess of 8% and then a sudden slump, and we have yet to recover from that. Growth is now averaging at under 4.5%. So quite clear that the post-war economic development strategy was not sustainable because the infrastructure was providing a reasonable return in terms of growth. The government neglected the export sector, and in the face of heavy foreign borrowing, it's not a sustainable strategy. For Sri Lanka, our debt service ratio, which was about 12% in 2006, started to climb the red line, and now today it is at about 30%. In 2015, January, there was a change of government. There was a lot spoken about elected authoritarian regimes, etc. Sri Lanka was considered that in prior to 2014, when there was some sense of that institutional weakening, etc., a more authoritarian style of government. So there was political forces that wanted to bring about changes, and unexpectedly they did bring about a change of government in January. The government promised two key objectives in terms of economic policy: to reorient towards export and private investment-led growth, and importantly on the second, to reduce Sri Lanka's dependence on China, both in political and economic terms. They called it rebalancing our international relations in favor of the US, EU, and India. But the immediate outcomes were not very promising in that, related to the elections, there was a lot of populist fiscal measures, which is, I think, quite common to South Asia. So the fiscal situation was completely out of hand. And second, Sri Lanka ran into a balance of payments crisis. As the government halted Chinese-funded infrastructure projects, foreign capital inflows dried up. We went to the Reserve Bank of India for swap arrangements, etc., but ultimately also had to go to the IMF for a program. Within a matter of 6 or 7 months, Sri Lanka's policy towards China did a complete U-turn. We resumed borrowing, foreign borrowing, through international sovereign bonds as a first step, and then resumed all the Chinese-funded infrastructure projects from 2016 onwards. So in the years 2015 onwards, in fact, Sri Lanka's foreign debt has grown even at a faster pace than before. With the IMF program, we have seen some degree of fiscal stability over the last 18 months. There has been upturn in revenue collection, etc. But these adjustments, as many would know, the austerity programs of an IMF is built on raising taxes, etc. These have had a contractionary impact on the economy, and on top of that, we've also had inclement weather, which has impacted the rural economy, as a result of which there has been a significant hike in cost of living pressures, etc. And today, Sri Lanka's biggest problem is that its growth has plummeted to 3% in 2017, the lowest rate of growth that we've seen in 16 years. The next 18 months for us is critical because there is a bunching up of debt settlements that are coming up. In many of the analysis on Sri Lanka's external debt, China is always quoted as being at the root cause of Sri Lanka's external debt. But it really, when you look at the data, it is the international sovereign bonds. We've borrowed more through the international capital markets than we have done through Chinese loans. And international capital market borrowing, there is no room for any renegotiation of that debt. For us, from 2019 onwards, about 6 billion bonds come up for resettlement, and for us, at this point, export recovery has not been strong enough. Sri Lanka does not have the official reserves to repay these, settle this debt. It is a matter of going back to the market to roll over. So the risks for the country of having to face a stiff premium is getting bigger by the day. And to add to the problems is that from the beginning of this year, Sri Lanka is on an election mode, starting with local government elections, provincial level elections, finishing the big one, the next presidential elections in 2020, early 2020. The economic reforms that were promised in 2015 have not fully materialized. There have been some regulatory reforms, but not a major reform push, and this has largely been blamed on the fact that we have a coalition government, a president and a prime minister from different political parties trying to govern together. In the first electoral test of the government's popularity since January 2015, they did disastrously. The former president, who had formed an alternative party, had a landslide victory, which suggests that the Sri Lanka's policymakers will be, their attention is going to be on political outcomes rather than on economic reforms for the next 18 months. So any notions of a reform push on the economy is very dim at this point. 3 years into an electoral cycle, when popularity is down, when tax increases are hitting the ordinary voters, it's difficult to push a reform package through. One concern there is that given the electoral outlook, that the government may reverse some of the fiscal reforms that it has done in the run-up to the 2020 presidential elections, and in the face also of growing opposition to reforms when trade unions, etc., sense that the government is on a particularly weak footing, the resistance to reforms also hardens. So at the moment, a major policy dilemma for the government, particularly in view of impending debt settlements coming up next year. Two possible scenarios, and that's my last slide. One is that they will reverse efforts towards fiscal stability, and that is do the populist thing that South Asian governments are quite famous for. The second scenario is that because of the fact that we have to go to international capital markets, they will try to hold course and retain some degree of macro stability. If the first happens, the usual vicious cycle of credit growth to the government, of capital inflows drying off, balance of payments crisis, and most likely a severe economic crisis for Sri Lanka in the face of its current depressed growth as well as high levels of debt distress that the economy is facing. It is hopefully more likely that the government will hold firm on some sense of fiscal discipline. The most likely outcome then is that we will not see a major breakthrough on the economic front, that the economy will see some degree of modest growth of 4 to 4.5% this year and next year. The big question in everyone's mind is that going to be too little, too late in terms of the election outcomes in 2020, which is most likely to bring the former government back in contention to face the current government for re-election. And if there is a reversal of the electoral fortunes of the current government, then Sri Lanka can quite ironically say that we've come full circle since the post-war 2009 development initiatives and our trajectory once again. Thank you.
Thank you very much, Dr. Weerakoon. Thank you very much for conforming to the time scale that we had laid down. Now, ladies and gentlemen, we have exactly about half an hour for a question and answer session. We could start. Yes, Professor Mitra.
The question is for Mr. Sanjeev Sanyal, but I'll be drawing on the other two papers, so allow me to state the question and elaborate very briefly. The question is, has India got a China strategy? Now, we get from Dr. Bhattacharya and also from Dushni Weerakoon what happens to the deficit that India is growing with China, and it's not a specific India phenomenon. We have seen that also with Bangladesh, but much more radically in the case of Sri Lanka. Now, the Chinese have developed a hybrid system where they combine the rapacity of capitalism with the stability of state support. So these hybrid companies, now this is what we get from the intemperate utterings from President Trump. I didn't know that Chinese companies lock in the foreign companies into sharing their secrets, sharing their technology, and the advantage of the latecomer in this case is supported further by the state. So one way or another, these Chinese companies build up these heavy deficits. Now, what can the democratic states of South Asia do? Because as we saw in the case of Sri Lanka, either you keep mortgaging more and more of your real estate and get more and more into long-term problems, or you try to rein in, tighten your belt and lose an election, which political parties don't like to do. So more or less they're stuck. The question to you then is, has India got a policy to get out of that trap?
Shall we? Okay. I don't see any other hands. So, yeah, Sanjeev.
Obviously, it's a tricky issue, particularly if you go into take this argument about bilateral trade deficits too far as an argument. India has a very large bilateral trade deficit with China, but overall it has a relatively modest trade, or at least current account deficit, because it runs surpluses with other countries. And there are, one could get, and the world of trade would go into a real complicated mess if we then tried to balance everybody's trade deficit more or less with everybody else. I mean, then, it'll end up with autarkic or very complicated methodology. Nevertheless, it is the case that in the specific case of China, there are a lot of countries in South Asia, and interestingly, in this particular case, we share the problem with the US of a persistent unidirectional trade deficit, which doesn't seem to be sort of unwinding. And one can have a long debate over whether this is due to unfair trade practices or not. The fact is, it is a structural problem, and if the balancing item is a sort of credit or FDI of a certain kind, which, as in the case of the specific case of the Sri Lankans, has become a complicated political issue, then obviously this is not tenable. Does India have a strategy on this? Well, obviously our strategy thus far, while we may have discussions on the geostrategic side, on the trade, specifically on the trade side, has largely been to not directly go for a sort of China strategy. Our strategy thus far is to be growing other parts of our economy
particularly the software sector, etc., and trying to grow that. So we don't have a specific China strategy as such, and occasionally, of course, we may put anti-dumping and other things, but that is not a strategy, it's more defensive behavior. But our strategy thus far has not been to sort of target any country as such. But of course, what may happen now is that because President Trump, whether you like it or not, has now thrown this whole debate into the ring, we will watch very carefully how this unwinds. Because while we may not have caused the debate, obviously as a sovereign country, we will watch very closely how this unwinds, and we will serve our own interests.
May I come in on this issue, please? I would like to join in and say, if India at all would like to have a China strategy, it should include a neighborhood strategy. You cannot have a China strategy only dealing with China without taking note of what is happening in the neighborhood. You see, this is the point. Because one of the reasons why the Chinese expansion in economic and other in defense and also political, as it's slowly showing up, is because how the neighborhood looks upon its closest regional power. If you just take the example of the India-Nepal relationship, how it has undergone dramatic transformation during those blockade days and thereafter and everything else, which shows immense insensitivity to a very traditional partner which is so much located in the neighborhood with India and Nepal. If you look at in case of Bangladesh, we have solved a lot of bilateral problems, including on peace and security issues, transborder terrorism and other issues, enclave issues, land agreement. But the Tista Water Treaty remains one of the real issue out there in the bilateral. So in many cases, whether you see in the neighborhood, whether the countries in the neighborhood are looking upon China as a balancing factor. And if you do not include that particular dimension in your aspirational China strategy, then it will be missing some point over there. The other point is that in the neighborhood, you will also see they do compare the terms and condition within which the economic expansion takes place. Just a simple example about the concessionality of the financial flows which comes from China and India. So most of both China and India essentially are source tied. That is, you get money in order to import from that country. And obviously it doesn't give you the best value for money because you are not going competitive. Now India, for example, on the first line of credit with Bangladesh, we would have to import more than 80% from India with that money. Now we have brought it down to 60%. And some of the money has been 200 millions have been converted into grant, which has gone for the building of Padma Bridge. Now, if you compare that with China, the element of concessionality, element how it is there, and how it affects the debt burden and other things will have to be looked into. So my basic point is that the China strategy, if at all India is going to have, it has to include a comparative neighborhood policy within that. Thank you.
Thank you.
So, India's Act East, Look East policy with Southeast Asia and the neighborhood needs to look at the trade relationships and FDI relationships. And one way to do it, to fast track it, is to go through the RCEP negotiations with the 10 countries. Now, whatever we hear, that India is actually very reluctant to get into it for fear of the Chinese imports or services not being included. So there are good reasons which India keeps giving. And there is a view that maybe it should be done first, leave India alone, and then India can come in later when it makes up its mind. But I mean, we talk about being Act East, then why is this RCEP becoming such a big issue when everyone else seems to be coming around to it?
Well, there are a number of issues here. One is that obviously we already have various kinds of treaties with ASEAN, with various other countries. So the only thing that we will add to that pie is going to be China itself. So it's, yeah, there is this serious issue about services which you mentioned. which is not a trivial issue because as you saw in my own charts, it is a very huge part of our trade and it is incidentally also the faster growing part. So consequently, this is first of all not a trivial issue. Nevertheless, one of the things that we are now of the opinion is that increasingly having more and more of these blocks and things is making actually trade becoming more and more complicated. We need a much simpler WTO-based, rule-based system if we have to get out of this morass. What you're seeing effectively between US and China is, in a sense, the end of the road for that path, so to speak. In the end, it's just become too complicated to keep track of how this current system works. We have to begin seriously thinking about unwinding it and coming up with a broader, simpler system. And maybe, perhaps inadvertently, President Trump may trigger that by this current line of debate. Just having ever more of these, you're going to have TPP, they'll have RCEP, there'll be, there might be an Indian Ocean one, but we may have one agreement with Canada or even the EU. There is, the networks, the complications of these trade networks is just becoming a huge burden, not just for us, for everybody. It's essentially we now have an unworkable global trading network, rules of the game.
Thank you. Yeah, there was somebody else. Deepinder? Yeah.
If I may just engage in a hypothetical exercise. So the level of integration in South Asia is amongst the poorest in the world. It's very low, and the tremendous amount of potential benefits that are being lost out. So the three panelists were to sit down in a closed room at the end of the session, and you asked to enumerate 2 or 3 liberalization measures which are viable, in other words, will evoke the least domestic resistance. Would you care to enumerate what those measures would be?
I actually dispute that idea itself. It is not at all clear to me that South Asia is no longer integrated. I showed it to you in the charts that India is, and its neighbors have, our neighbors are now very rapidly becoming some of our biggest trading partners. So this may have been true, say, a decade ago, but it is not any more longer true. The amount of trade and increasingly investment going back and forth. Maybe China is growing faster, but the idea that India and its neighbors are not integrated with each other from the Indian perspective is no longer true. I mean, you saw my own charts. Bangladesh and Nepal are our top 10, and they have replaced what used to be European, our big trading partners, like European countries.
Just the volume of trade is indicative of integration.
I mean, we are here in a trade session. I mean, that's why.
Policy measures, surely.
Yeah.
It's merely saying that there's a very high barrier. Despite that, there's still an imperative.
Yeah, so what I'm trying to say, it has dramatically improved from what it used to be and is no longer the case that it is So of course, I mean, we can do always more, but you have to see it in the context of where it came from. And it very rapidly is growing. It certainly is growing vis-a-vis Bangladesh. It certainly is always high in the case of Nepal. Even in the case of Sri Lanka, there is a lot of back and forth trade going through. I don't think it is any longer the case that the story that, they are not integrated, would not be any longer viable if you exclude Pakistan out of the equation, would no longer be true of the maths anymore.
Let me try and answer that is it on? Yes. I think both are right in saying that we are trading more in South Asia, but that doesn't mean interregional trade has grown, because we are trading more with each other, but we are trading also with the rest of the world. Our trade is also expanding, and that is why the intra-regional trade figure is still at about 5 to 6%, and by regional blocks, that's the lowest. So I think in terms of the typical measure of integration, and it is on the basis of trade, then South Asia still would remain least integrated. The question you asked about what can we do I'll take the example of Sri Lanka. We've had a free trade agreement with India from 2000 onwards. And it's generally touted as a relatively successful agreement. If you look at the volume of trade, it increased. The trade imbalance between the two countries shrank in Sri Lanka's favor. We've had a lot of foreign investments coming in from India, which was not covered by the FTA, but because of better improved political relations also between the two countries. But since 2008, when we had finalized a comprehensive economic partnership to take it into services and investment, Sri Lanka has not been able to convince its stakeholders to sign that agreement. We have since finished the Singapore-Sri Lanka FTA. We have finalized a FTA with China, but for political reasons, you can't sign the Chinese one first before the Indian one is inked. And that comes back to, I think, something that Deb said earlier on. If you're looking at India's approach on China, you have to look at what is going on in the neighborhood. China's presence in Sri Lanka, for instance, the largest source of foreign investments, we have about 50,000 Chinese workers. If you go into Colombo, Chinese restaurants, it's massive, the scale of involvement. But there is hardly any backlash. If there is any Indian interest in buying an oil refinery or investing in Indian investments in Sri Lankan ports, there's a huge backlash. And I think that comes back to the long histories and tensions and the geographic proximity of our countries to India as opposed to handling our relations with China. So I fully agree. For India's strategic approach to China has to also think around some of these issues because those are really not bilateral, but it's a regional approach that needs to be taken.
Yeah, I think it's an interesting query. I agree with Mr. Sanyal. The trade is increasing within South Asia. But if you look at the number, as Dushni has just mentioned, that this trade is increasing, but the trade with the rest of the world is increasing faster. Now, if you look at the export-import structure, which I have just presented here, then you will see that what countries like Bangladesh, or for that matter, other regional smaller countries, what they're doing, they're sourcing from India and China and exporting to the rest of the world, to European Union and to USA. Bangladesh, for example, sources all its fabric from China and partly from India, beyond its own domestic supply. So, but then it gets a better price exporting it away, and it is a competitive product with India in its neighbor market. So it cannot be exactly said that it is good or bad, because for an economist it's always a two-handed answer, that it is good and it's bad at the same time in certain ways. The fact of the matter is that till now, this is where we are stuck. 6 to 7% of the intra-regional trade is of our total trade. So it's only 6 to 7%. So the intra-industry trade, which is the major way of expanding trade, is also not happening in that sense. Up to a point, the import, but not the export. So what is the problem? The problem is India and China as a potential export market is not available to the other smaller countries in the region. Now, and both the countries have offered duty-free, quota-free market access to the least developed countries, but still it is not affecting the export volume. Why? And that is where I respond to your question. If you have been put into a room, 3 of the people, and close the door and without full anonymity, then what you would have done? Do it in the early hours of the morning. Then you are exhausted, you will come to a conclusion very fast. That is the WTO negotiation style. So what you do, number one, is the tariff issue. Even after giving zero tariff to the Indian markets, there are still state-level tariffs, and there are lots of confusion about other types of duties, cess, and other things in Indian market. The new GST in India, I don't know how much it will solve that problem, but the tariff even for a duty-free tariff, we have to pay 17%, 18% in different countries, and Indian business will say it is paid by everybody or not. That we don't understand. The full federal structure, fiscal federal structure as it goes. The tariff is one of the issues. But even more important is the non-tariff issue. Non-tariff issue, the non-tariff barriers, if not to be removed, then it's very difficult. We talk about China, about other things. India putting countervailing duty, anti-dumping duties on Bangladesh products, on jute, its major export item, and it has just extended that anti-dumping duty for another 6 months or 1 year over there. So, and it is done because of the business interests, how it influences the fiscal policy within that country. So, non-tariff barrier is the sine qua non. If you do not deal with non-tariff barrier, no inter-industry trade is going to happen in the region at all. And my third point, time has come to link investment policy with trade policy. Without investment, the interface between in a very complex global financial economic relationship, trade cannot be financed as such. It has to be taken at a higher level to macroeconomic policy coordination, financial liberalization, at certain point inclusion of the service sector. But the issue of investment is very, very critical over there. So 3 issues. Clean up the tariff once again. Non-tariff barrier, do away with it. Don't get influenced by the business cartels and others. And third, bring in investment policy along with trade policy. Thank you.
I'm from the ASEAN Studies Center, and one good indication of regional integration is intra-regional tourism. In the case of ASEAN, I think 45% of tourist arrival came from within the 10 members. So far today, none of the panelists mentioned tourism in South Asia. Maybe any one of you can mention any number about intra-regional tourism in South Asia. Is it happening? Are South Asians visiting neighboring countries? If not, why? And which country send the largest number of tourists into South Asia? In the case of Southeast Asia, the Chinese send about 10%.
Yes, gentleman at the back. Yeah.
Thank you. My question is, we all know that in recent years, China has announced One Belt, One Road policy or initiative and officially launched it. On the purpose of improving the nature relation and also trade and economics among all the participating countries, particularly talking about South Asia countries. But there are some concern, and most controversially, talking about between China and India, that actually this One Belt, One Road initiative include China-Pakistan economic corridor, which actually include the territory, which is still ongoing dispute territory between India and Pakistan. And another concern is that there's another lead report that mentioned that China investment, huge investment, which is around 56 billions of investment in Pakistan, is actually they mention is some kind of economic. They mention it as a ploy for economic domination. So how do you all think about this in terms of affecting those participating, especially South Asia countries? Thank you.
Just related to what we have been talking about, and even for the Belt Road Initiative, given that the mistrust, and China has leveraged on the mistrust within the South Asia region to encircle the countries around India and tighten the belt around Indian belly, given that the Belt Road Initiative is penetrating right into the hearts of the European countries, and which gives market access to a lot of other countries, would it not add much of an impetus for countries which is around India, Nepal, Bangladesh, Sri Lanka, Pakistan, to take advantage of that and use that route to export from China, or take the Belt Road initiatives from and do more transactions with China and initiatives with China? And that could be a challenge for India, especially when the trade across the globe is concerned. Thanks.
Okay, thank you. I think that provides enough for each one of us. Maybe start from there. Bhattacharya, would you like to respond?
No, I
I can only agree with the things which have been just said. The issue for small countries like Bangladesh is to improve its connectivity with as far as possible. And this connectivity is not only through multimodal transport system, it has to be also financial connectivity, internet connectivity, and many others as well, including political alliances. Now the issue is that whether bigger countries, relatively bigger countries in the region, do they play a conservative role over there, or they play a much more positive forthcoming role? So that is the point over here. Do they engage in competition from the perspective of complementarity, or they engage from the complementarity from the point of view of competition? As at this moment, if you put it into a game theoretic approach, we do not see fuller cooperation as it stands. And it is also influenced by the incident in Doklam, and the India-China relationship is going to influence the thing. But the issue is, as Mr. Sanyal said on the WTO issues, I fully agree on that. The WTO multilateral open rule-based system is the solution. But is China and India is equally playing that coordinated role in that platform as well? So my point is that, can we get a much more coordinated role of India and China, both complementary, a competitive complementarity, let me put it in that way, competitive complementarity, when they are not really engaging its full potential in the global platforms as it is coming through? Or to what extent this mutual relationship, both globally and regionally, will be affected by the bilateral relationship? So we see layers of things over there, which essentially at the end of the day will depend on the political leadership, which the wisdom and the vision which our leaders are going to show. And I want to trust them. Thank you.
Yeah, I mean, I echo this point that, remember, when we are talking about neighbors, China is also a neighbor. It's also our largest trading partner. One has to take into account the fact that, not everything is geopolitical and geostrategic. They are an important trading partner, and we have an important relationship with China as well that we need to take into account. Thinking about this purely as competition is not right, and I take Dr. Bhattacharya's view that yes, it is also, there are many areas in which India and China collaborate, including on various forums, including on trade forums very often. So, it is much more complicated than, playing a game of tennis in which you just have to win is the only way to think about it. Now, the various points that were made in the questions, one of them is obviously tourism. Absolutely, I mean, this is an area that should grow, but, Indian tourism, outbound tourism has definitely been growing over time. I mean, in Nepal, for example, it's always been very important, but you'll see more and more Indian tourists in, say, Sri Lanka coming. Bhutan has lots of Indian tourists. Similarly, Bangladesh sends a lot of medical tourists to India, education tourism. So there's a lot of movement, and which is growing again. That's why I'm saying, while, one can argue that it's not enough, but the fact is that compared to where we were, say, a decade ago, this region, ex-Pakistan, has certainly become much, much more integrated than it used to be. And as the physical infrastructure begins to fall in place, it will probably grow even more. I think there was one question about OBOR and India's participation or non-participation in it. Let me just also point out one important factor here. From an economic perspective, one needs to not get too carried away by OBR for one important reason. You see, most of the bit of China that we all want to trade with is on its eastern seaboard. And getting a piece, any product from that Shanghai and in and around, or the Pearl River Delta area, to India or Bangladesh or Sri Lanka is simply cheaper by ship. So, frankly, anybody who thinks they're investing large amounts of money on building roads may discover that, bringing a product from Shanghai by road to wherever it is, Gwadar or wherever it is, may not be quite such a great economic idea. And, it is not, never mind the geostrategic issues here, simply from transport economics perspective, taking on a large loan by a country like India to build infrastructure that may not have great economic value is something we need to think about.
Just on the One Belt, One Road initiative, and I'm talking from Sri Lanka's own past experience. I mentioned that 2015 there was an attempt to shift away a little bit on dependence on Chinese financing. In 2018, the China-built port in southern Sri Lanka, which is part of the One Belt, One Road mapping, Sri Lanka did a debt-to-equity swap with China. So there is actually Chinese ownership now of that port, and adjoining the port, industrial zone for Chinese investors was also handed over. And in the Colombo port, which is Sri Lanka's main port and South Asia's generally is considered to be the most efficient port, there is a Colombo Port City project, 1.4 billion Chinese investments into reclaiming land with a 99-year lease given to China for bringing in industries, mixed development projects, etc. Now, for a country like Sri Lanka, investments for infrastructure is continuing to build, and access to financing from ADB or World Bank, etc. is limited. China has deep pockets, and as long as those interests match, I think very few governments will find it easy to walk away. And Sri Lanka really has been one of the first countries to sign up onto the OPO initiative.
Thank you. Thank you very much. I think that brings us to the end of the second panel. I must thank my panelists for the excellent presentations and the lovely way in which the question and answer sessions were taken. Dr. Weerakoon, Mr. Sanjeev Sanyal, and Dr. Bhattacharya, thank you very much for a lovely session.
Thank you, Mr. Rai, and our distinguished panelists. Mr. Rai will now present some tokens of our appreciation to our distinguished speakers. First, Mr. Sanjeev Sanyal. Next, Dr. Debapriya Bhattacharya. And finally, Dr. Dushni Weerakoon. Ladies and gentlemen, we will now adjourn for a short tea break outside the ballroom. Please return here for the next session by 4:40 p.m. Thank you.